We are now joined in this session by William Wright. He is the contributing editor to Financial News. Thomas Zeeb is with us as well. He is the CEO of Securities Services. And Roland Bellegarde, he is the Group Executive VP and Head of European Execution at NYSE Euronext. Gentlemen, thanks very much for joining us this morning. Roland, if I could start with you, because I think everybody in this market is thinking about this multi-billion possible deal that we're going to get between Deutsche Börse and the NYSE Euronext. We've had a flurry of activity, as I said. Tell us how you see this is all going to play out.
And fundamentally, what you could see is that exchanges are not different from any other type of company. When you have competition, when you have an industry with fixed costs, it's an issue of scale. Mm-hmm. So fundamentally, having competition rising in Europe by MTFs, by OTC business, having more willingness by the end users and the end customers to have the benefits of one single landscape across Europe. Clearly, this is driving the key decisions of trying to increase the scale of the company, trying to get bigger, trying to merge basically with the major players in this field in Europe.
I'm trying to get everybody to not use jargon when they come speak to us at Sibos TV. So ATS, Alternative Trading Systems, because we've got people from all over the world. Tell us how that has been affecting your business, because these are the dark pools everybody has been talking about. Tell us a little bit about that.
So what happened in 2007 is that the European Union enacted the MiFID directive, which is a directive allowing competition towards the exchanges in Europe, creating this competition through alternative platforms, allowing, in fact, anyone to set up a trading venue to compete against the exchanges. This has basically, over 3 years, taken around 30% market share to the existing exchanges in Europe. This has been, by itself, forcing those entities, the exchanges, to find ways of being more profitable and for them to try to gain scale. And this was the main reason, basically, of trying to combine with other exchanges in line with what we had done since 2000 in the Euronext environment.
So Thomas, you're from Securities. Tell me how you see this tug of war is going to play out between the exchanges trying to consolidate, and then you've got, on the other hand, these ATS really fighting to take more market share.
I don't see that, certainly as regards the post-trade space, it's going to make that much of a difference. We had consolidated exchanges in the past, as Roland has mentioned. The MiFID legislation allowed for increased competition, and now I think it'll be a chance for the market to decide which platforms will survive and which ones can produce cost-effective services.
What do you think the market will choose?
I think the market will continue to choose as much competition as possible, because ultimately the market is looking for freedom of choice, and we've seen that over and over again.
William, what do you think will be the main implications of how all of this plays out?
I think to what Roland and Thomas were saying, we've seen this consolidation among exchanges in reaction to competition. We've seen them seeking three things really. One is geographic diversification, trying international acquisitions and consolidation activity. Asset class diversification, so moving into other fields. But one of the most interesting areas, and one that has received among the least attention, is what's going to happen in the post-trade space, because exchanges are increasingly pushing down into post-trading operations because the rest of their business is under so much pressure. And I think what Thomas says about the market really is going to have to decide. There are two very clear models on the table. Without going into too much jargon, one of them is the vertical model, the other is the horizontal model. They're competing, they have benefits and disadvantages to users. Each one, there's a case to be made for each. But there's going to be, I think, probably for the rest of this year and through into 2012, this debate is going to continue, and I don't think we're going to see a resolution anytime soon. Okay.
Is there a model that people should be looking at as the go-to model? Thomas?
I don't think it's as simple as that. The vertical silo model was one that fell out of favor some years ago because they were closed silos. They did not allow for access coming in from the side. Increasingly with legislation, particularly in Europe, there's certainly a recognition that silos are a more efficient way of working, but there has to be the capability for clients to have access to the various elements of that silo through the different parts of the value chain, if you will.
Well, Roland, with all of this exchange consolidation, we're seeing a lot of regulatory, legal issues, even political issues have come into play, national interest issues as well. I mean, it's getting quite complicated. So for people sitting on your end, where you just want to do the business, you want to cut down your costs, you want to be more competitive in a global market space, how frustrating is that?
In fact, it's not really frustrating. What you need to understand is that Europe is made of a certain number of countries, each of them having its own regulator, its national flagship being an exchange, and consolidating those exchanges takes a lot of time. You can do it, we have done it. We have done it and we have harmonized most of the processes across those exchanges. It's not done in one day. It's not like any other company. It's a highly regulated environment, but you can still do it as long as you have the proper level of discussion with the regulators and the politicians to get to that point.
I want to get to this idea of cost savings, because this is a thing that everybody says is going to be the big benefit of exchange consolidation, but there have been critics in the past who've said it hasn't really brought the kind of cost savings that people have initially thought. And Thomas, if I can get to you, I mean, do you feel that that is not translating those cost savings as much into post-trade?
First off, I don't believe that exchange consolidation in and of itself will reduce cost by definition in the post-trade space. The drivers of the cost savings in the different levels of the value chain are quite different. And in fact, if we look at what has happened in the exchange space, you see because of the MiFID legislation that Roland has referred to, there was an increase in competition, increased platforms coming on stream. The various pieces of legislation that are being prepared in Europe at the moment are continuing to look for increased competition. And therefore what we're seeing is, in the short term, I think there will actually be increased fragmentation, more competition, more central counterparties and so on. We're seeing that already. And over time, the market will determine which players survive, and that will be the consolidation effect.
I think there's a very interesting issue around costs in the post-trade space, which is the sharing of the economics between the post-trade market infrastructure providers and users.
And this is a problem, nobody wants to share.
Well, the users obviously want to pay less and less and less and less and are putting more and more pressure on service providers to reduce costs. But we're getting to a point where the level of regulation, the changes that are going through the post-trade infrastructure space at the moment, for example, reforms to OTC derivatives and clearing, making sure that trying to get as many OTC derivatives as possible in the future to clear through central counterparties, that is in turn raising the costs for infrastructure providers. So again, this debate is going to probably intensify actually as those reforms come through, because the providers are going to be arguing not unreasonably that they have reduced costs already and they cannot really go any further and still make a reasonable return.
And these were some of the comments that we heard earlier from Dominic Hobson, some of the comments that he alluded to. 2011, Sibos, paint for me the picture. Are we going to be still having these same discussions in 2012, or is the market going to move on a little bit? Roland, I'm going to start with you.
Very likely you'll still have the same debates because this space doesn't move so quickly. But as William was mentioning, it's fundamentally a race between two different options to reduce costs. We are all willing to reduce costs for the end users. But either you do it through consolidation or you do it through competition. The truth, in my view, is that it's a balance between both of them. It's a mix between some level of consolidation with some level of competition. Full consolidation by itself could lead to cost reduction, but it's not guaranteed.
Yeah.
If you have full competition, you will get to fragmentation that probably doesn't lead to cost reduction. It's the right balance between the two that can lead to the benefit of the users of real cost reduction.
And then I think a lot of people are worried about the fact, is bigger, in fact, better? Because there's a lot of monopolistic issues that go into play, lack of competition. You say you want more competition, but everybody says, well, that's all right for you to say, but there'll be less players out there.
And the answer is bigger is good and definitely good to get.
Bigger is definitely better.
Better to get a level of consolidation that drives the cost down, but still large and big is good as long as you have a minimum level of competition. And then a minimum level of competition that guarantees enough incentives to reduce cost, but also a level of competition that allows the big institution to have margins to invest.
To your point, I would be surprised if we're not discussing exactly these issues at Sibos 2015 or Sibos 2020. This debate has been raging for more than a decade on the different models available in the post-trade space. As Roland said, consolidation, integration takes a lot of time, even when you get over the political and regulatory hurdles to actually get a deal done. To then go through and actually integrate it and turn it into something concrete can take 5 or 10 years in itself.
And Thomas?
I think to add to what both William and Roland have said, if you look at Sibos 2011, I think the defining theme is uncertainty, and that will continue. The sheer volume of regulation that is coming, that we don't know yet exactly what it's going to look like, means that we will be having this debate next year and the year after and probably the year after that.
And what do you think, Roland, I want to come back to you. Sneak peek, do you think this deal will go ahead, Deutsche Börse and NYSE, Euronext? Come on, you could tell us. There's no one here.
Definitely would like it to go forward, for sure. And I'm 100% certain that there will be enough competition around us. We won't be the unique player across Europe, but definitely we would like to be in this field and would like to be the consolidator to lower those costs.
Do you think it will go through, the deal?
I think NYSE, Euronext, Deutsche Börse will go through. I think there are bigger question marks about potential corporate activity around LCH ClearNet at the moment, which is currently subject to, I think, its 4th or 5th bid in as many years.
Yeah.
So.
I think the big deal will go through, and certainly I'm very much looking forward to being one of the competitors that keeps them honest.
All right, well, thanks very much to all of you for joining us. William, Thomas, Roland, it's been a pleasure having you all on Sibos TV. Enjoy the rest of your time here in Toronto.